Trent Bradshaw, Brandon Rogers, Bradshaw Rogers Financial Partners, and Mind Your Money. Wanted to bring you a market update. Today is September the 23rd, 2024. A couple bullet points we're going to talk about. Obviously, we got to discuss interest rates and then what the forecast looks like going forward. But then ultimately, how will that impact the broader markets? Maybe the bond markets may be back in play. So we'll touch on those two items and discuss what we think is going to happen in the next quarter. All right, let's jump right in. Let's talk about interest rates. Last Wednesday, the Federal Reserve, which will be September the 18th, last Wednesday, they cut interest rates by 0.5 point. That was a bit of a surprise because most of the analysts, most of the investment banks out there thought 0.25 point. But the Fed's coming in aggressive, cut 0.5 point. That was a positive for the market. Market had a positive week again. So we think that may be a positive for equities going forward. But let's talk a little bit about the forecast. When we look at the probabilities for interest rates going into the end of the year, it sounds like some of the Fed board members are willing to be more aggressive in regards to recommending rate cuts going forward. So we could see another 0.5 point to potentially 0.75% come off the interest rates before the end of the year. Think about that. There's a lot of liquidity that goes back into the market. If anybody needs to borrow money, that actually helps them because the interest rate should be coming down. Home equity line of credit should be coming down. So this should help the consumer to get liquidity back into the market, start spending some money again. May help corporate profits. But talk a little bit about the impact on stocks and also the bond market.
Yeah, so as mentioned, that is a positive for lending, right? So people want to borrow money and spend, and when they spend money, where's it going to go? They're going to go buy goods and services, right? So typically you'll see, financials do pretty well in a rising interest rate environment, and then when they're cutting rates, when they're cutting rates. Sorry, the Fed's been raising rates like crazy, and now they're actually cutting it,
when
right?
They're cutting rates, it's potentially good for financials because of refis.
And then you'll see your bond prices are going to be good. Again, bonds have been dead for a very long time, and now you're probably going to start to see them come back in favor. So longer term paper is what we're really looking at. Everybody's been loving the money market rates, the treasury bills, the CDs that you see out there, but you've already seen that stuff come down, right? So we'll continue to look for that. But again, at the end of the day, borrowing hopefully will drive spending and will be good for the economy and be good for stocks in general.
And what's interesting about that, if you go into 2025 and what the probabilities say there, we could be looking at another full point to 1.25 points coming off the federal funds rate in 25. If that happens, we potentially could see mortgages back in the 4% range. And you talk about a lot of refis coming in, it'll be a tremendous amount of inflow coming into the financials, refining those mortgages if that actually occurs. So it could be a positive for financials like you'd mentioned. Also real estate, which we've got in the portfolio. But really the one we're going to focus on is probably the financials going into the fourth quarter. We think this could be a real positive.
So again, we'll keep you up to date with everything. Obviously, reach out to us with any questions whatsoever. We're here to help out any way we can. But again, thanks for joining us. This is Brandon Rogers and Trent Bradshaw with Mind Your Money. Take care.
You're going to be able to get it. Yep, perfect. All right. Good topics.